Welcome back to our second last presentation. It's not the last one today, with Alison Leavitt. It goes about bulk shipping, risk management, insurances. I think a topic very, very important for the bulk wine industry, especially with all the problems we are having with shipping, with logistics, transport in this worldwide crisis, the last 2 years now, we have to say already. With Alison, we have another face I'm already familiar with here today. We saw us last year for the first time. To explain all the activities Alison is doing would take 5 minutes minimum, so I shorten it a little bit. Since 2013, she's Managing Director of WSSA, the Wine and Spirits Shippers Association of the US. Under her management, WSSA has grown dramatically and formed coalitions with other industry associations, port authorities, and trade groups. WSSA today represents over 600 members involved in the import and export of alcoholic beverages and related products. The association manages over 35 service contracts and a cargo insurance program that covers over $500 million in value in beverages shipped globally. Ms. Leavitt has been involved in the international logistics industry for over 30 years and is also a licensed US customs broker. She serves on various boards, amongst them the editorial board of American Shippers, and is involved in the AGTC, Agriculture Transport Coalition. At this point, I stop. I could continue another minute. Alison, you are the expert for logistics, shipping, and everything, insurance. Thank you very much.
All right, good, this works. Well, hello everyone. Thank you so much for the introduction. It's great to be back here at WVWE. I think I've been coming for many, many years now, and it's exciting to see the show so reactivated this year. I think in this case, what a difference a year makes. How many of you in the room were here last year? Was that 2? Okay, so there were a few, 3? There were a few brave souls that made it last year despite the lockdown, and certainly at that point we were still in the midst of the worst supply chain crisis that we had ever seen in our history. As was mentioned, I've been in shipping a very long time. It's almost 40 years at this point, and in all of those years, nobody had seen anything like what happened in the last couple years. So as mentioned, I've been involved in shipping and heavily involved in the shipping of beverage alcohol for many, many years. It truly is my passion, and WSSA has been a great avenue for me to really expand the horizons and serve the industry on many, many different levels, both in the shipping side as well as the insurance that we'll talk about today, affiliations with associations and things like fighting tariffs on US products exported into UK or EU over the last years, or import tariffs, or any number of issues that confront the industry. So again, it's been a wonderful time and great to see everyone. Today, like I said, we're going to talk mostly about marine cargo insurance and the risks involved with bulk shipping. We will also touch on the incredible change in what is happening in the shipping industry, and the pendulum is swinging again, shall we say, very quickly in terms of the congestion and capacity issues that have plagued us for the last couple of years. We're seeing a pretty massive shift. So the association itself, just to give you a little background, our primary mission is to negotiate. I say competitive. I will say in the last couple of years it's been just getting freight on vessels, negotiating the correct rate to be able to get you a slot on a vessel. That has not necessarily been a competitive rate, nor has the service been very good, but it's been absolutely imperative that we have the relationships with all of these ocean carriers and long-term relationships, and said negotiating the right rates to get you on ships. The other pillar that we work from is this risk management program, and we are up to actually more than $1 billion worth of product insured. That the amount insured actually rose dramatically during COVID and during this crisis because the risks were worse, whether it was risks of theft risks of, delay in transit and damage. So the more there is risk out there, the more people want to control something. And the other item, as I mentioned, education, advocacy, intelligence for the industry. We send out constant mailings on what's going on all around the world, whether it's a port strike, whether it's a tariff issue, whether it is something like, what's going on with risk management as a whole. So we work with a freight forwarding partner exclusively, Albatrans Inc., and Albatrans is our boots on the ground. I see a few members of the Albatrans team hanging out in the back of the room. Albatrans covers the world in terms of every single wine and spirits origin location as well as import location. So Albatrans is our exclusive partner, and while we are working on the contracts and the sort of general industry information, they're the ones that are actually moving your cargo. All right, insurance. Not the sexiest topic in shipping, but something that is absolutely necessary. And certainly, I've been speaking to a lot of different groups over the last 2 years, sometimes discussing these global supply chain issues, but a lot of times talking about risk management. And I think that shippers have felt completely out of control over the last couple of years. Nobody knew when their cargo was going to get loaded, when it was going to get to the final destination. And one of the few things that could be controlled is your risk profile. So when you think about cargo insurance, it can be used on any conveyance, so ocean, aircraft, trucks, rail, barge, warehouse. So it is a very, very broad type of insurance. And, it's often referred to as marine cargo insurance, but it isn't just marine cargo insurance. It can cover all different modes of transport. However, it is probably one of the least understood forms of insurance. None of you would go around with an uninsured car or an uninsured house or a business without insurance. Those are regulated lines of insurance. You just would not go without them. But when it comes to cargo, many, many people go without cargo insurance. So today we're going to talk about a little more about why you should have insurance and what cargo insurance is all about. Just briefly on the global market, just to touch on this because I think it is really important to understand what is going on in the shipping market. Certainly we never predicted what was happening during COVID, the incredible buying frenzy that went on primarily in North America. It really was the U.S. consumer that drove the supply chain crisis. And now it is the U.S. consumer that is stopping the supply chain crisis. Orders are down almost 40% for consumer goods coming out of Asia. Those figures have been coming out over the last few weeks. So the growth engine of North America has literally stopped. So we turned it on and it is getting turned off, and the rates from Asia have fallen off a cliff. So I think last year we were talking about Asia to USA. We were talking about rates between $15,000 and $20,000 for a 40-foot container going into New York. Those rates are almost at pre-pandemic levels at this point. So just phenomenal shift. That has not really happened in the wine and spirits trades. The European trade lane, transatlantic, that is a very stable trade lane. The rates are remaining quite solid. We haven't seen those dramatic drops in most of those wine and spirits trades. We will see some reductions. There is no doubt you will be paying less in freight for moving your cargo in 2023 than you did in 2022. We just don't know how dramatic that shift is going to be yet, but there are estimates in that about 10 to 15% range. And we'll see. The ocean carriers are also more adept at pulling capacity out of the systems. They have gotten very good at what we would call canceled sailings, in their terminology, blank sailings. They will omit sailings, they'll omit ports, they'll lay up capacity. They don't want to see this plunge in rates that's happened in the Trans-Pacific. So I think we are seeing, again, significant changes in port congestion, fewer port emissions. Schedule reliability has maybe crept to about 40% from 30%. So it is still abysmal, but it is getting better. And I think that was the other big shock, especially in the U.S. market, as cargo started to flow again. And people were estimating, say, a 60-day transit from Rotterdam to New York because of all the vessel rollings and delays. All of a sudden, they're getting their cargo in, under 30 days. And just absolutely shocked that the things are actually arriving closer to an on-time schedule. So some really big shifts in the market to keep an eye on. Now, again, back to the kind of the insurance profile. We do a huge policy, as mentioned, insuring plus over $1 billion at this point. And one of the things that we have developed at WSSA is a policy completely tailored for beverages. And we'll talk about why we've been able to do this in a minute. But again, covering things like temperature damage, that's something that some policies cover, some policies don't. Policies to cover goods that are stored in warehouses. Policy that will actually cover the damage to the container. That's very, very unusual in insurance policies. Even coverage for flexi tanks. There are many insurers that won't cover flexi tanks. So we also spend a lot of time training people on insurance. What does it mean? What do you do if you have a claim? Who do you go to? And from our standpoint, we have a very long-term relationship with our broker and underwriter. They understand our business. Most insurance brokers wouldn't know what a flexi tank is if you told them, and have no concept about what is needed in terms of insuring for bulk cargo or even case goods. For us too, we have a team that just handles claims and settles claims and chases down claims. So instead of having to have a department of your own that is dealing with that, you have someone to turn to. So we are very, very proud of our coverage. We work very hard to enhance it every single year. And but it's something any of you can do individually too. And the reason for that is basically that cargo insurance is not regulated the way other insurance coverages are regulated. So again, if you're insuring your business or your house, these are regulated lines of insurance that have boilerplate policies that basically everybody is getting the same type of coverage. And with cargo insurance, it's very different. I say it can be a good thing, it can be a bad thing. From our perspective, it is a very good thing because we've been able to design a policy that can cover almost any contingency that happens in the transport of beverage alcohol or storage. Label damage, atmospheric condition problems, contamination. So virtually anything that can happen to your cargo, we have been able to put into our policy. It's a bad thing because if you just have, you go to your whether it's your logistics manager or your risk officer and you say, hey, do you have cargo insurance? And they say, yeah, of course we do. If you don't actually read that policy and understand what's in it, you have no idea what might be covered. So the exceptions can be massive. I mean, you might have a claim and find out that you're actually not covered for flexi tanks, or you're not covered for transport in Argentina, or you have a $50,000 deductible. So I think the percentage is something like 10% of people actually know what their cargo insurance covers. Most people never read the policy and have no idea what is in it. One of the things we do a lot is take people's policies and just do an analysis, check for the gaps, find out what's good about it, what's bad about it, and just give a neutral assessment of, okay, these you've got a good price, but you're missing these three things, or you've got a good price, but you're never going to get a claim processed with this policy. So it's really, to me, insurance is not the most exciting thing, but I think cargo insurance is kind of exciting because it's all over the map. There are no standards, so it's just something to keep in mind. Now, again, just the basics of cargo insurance. You hear the words all risk. What does that really mean? And all risk actually just means physical loss or damage from any external cause. And that's another really important thing when you think about insurance. It does not cover losses within your control. And the phrase that they use in the insurance world is inherent vice. I always kind of like that. That sounds, it's just a great term, I think. For example, if you're shipping ice cream and you do not ship in a reefer container, your ice cream's going to arrive spoiled. You're not going to have a claim. That's inherent vice. If your product is not packaged well, things that are within your control cannot be covered by any insurance policy. So again, all risk is all risk, but there are risks that aren't covered, the ones that you can be responsible for. I think some of the other things that are missing in most policies, if you do happen to, leave this seminar and decide to look at your policy, things like duration of risk. That is one of the most important items that in times like the supply chain crisis, incredibly important. Most policies actually have a stated duration of risk clause. For example, 10 days after arrival. If you don't file a claim within that time slot, you're not covered. As we all know, in the last couple of years, your cargo could sit at terminals for weeks, sometimes months, in terms to get it get things moving based on the congestion. So for us, we put unlimited risk, but duration of risk is one that's often left out. Contingency insurance we'll talk a little bit about later. Again, incredibly important if you are selling on either ex-works, well, especially ex-works terms in the case of most of the people in the wine business, understanding what you might need for backup insurance if your party that you're shipping to does not have proper insurance. So we'll talk a little more about contingency insurance later. Things like control of damaged goods, something you don't really talk about that much or even understand, but if you file a claim and your insurance company is paying out on that claim, they own those goods. They can do whatever they want with that product. So I think in the wine industry, it's incredibly important to have this control of damaged goods. If you're shipping a flexi tank and it gets heat damaged on the, and your buyer says this is, it's either contaminated or the heat has destroyed it, and a claim is paid out, that insurance company can do whatever they want with that flexi tank of wine. Same thing with case goods, and I think we talk about it more with case goods because people have their labels on case goods. They do not want to have their brand of wine out there in the market being sold somewhere as salvage, even if it's turned into vinegar or something else. Control of damaged goods is just something that you don't think about very much, but absolutely should be in a policy. The sue and labor clause, war risk clause, things like that. There's a lot of stuff that happens around the world. Between the strikes in various European ports, these type of things, if there's cargo damaged because of an issue with a labor strike or something, most policies won't cover that. So it's one of those things to just really get deep into in terms of what is actually in your policy. The other big thing that most policies do not cover are, they will word it as acts of God, natural disasters. This chart shows you this is a couple years old, but it's only been getting worse, the loss from natural disasters. It is the single most problematic item for underwriters. They are looking at the issues from climate change, the storms, the floods, the tsunamis, you name it. When I was here last year, there had just been, and I'd never heard this term before, a bomb cyclone off the coast of Canada, west coast of Canada, and a few hundred containers got knocked off a vessel. So that type of thing, most coverages would not cover, and it is a big risk if you're kind of on a standalone policy, just because it's the risk factor is getting so high. But you can see these numbers. I mean, $268 billion in losses just from natural disasters. It's just incredible, and something to note that it probably will get worse before it gets better. The other factor that's happened a lot over the last few years is fires on vessels. So you've got these mega ships, 20,000, 24,000 TEU ships. There's hazardous cargo on every vessel out there. There are things that are happening now that never happened before. A fire happens deep in, the stack of containers. You can lose a lot of containers before they get that fire out. I think there were more vessel fires in the last couple of years than ever in history as well. So we would say if you haven't had a loss, you could have been shipping for 20 years, maybe never had a cargo loss. And we'd say you've been lucky. It probably will happen. Insurance is one of those things, you don't need it till you need it. But eventually something will happen. And the statistics in terms of the 30% of losses in transit are unavoidable. There's very little that you can do to control certain losses if there is a huge storm, if there is, vessel that has to basically offload containers at sea because the vessel is at risk. So for sure, it's one of those things that we would say you have been lucky. If you hadn't had a loss, you probably will sometime. If cargo is not insured, and many people will assume that they don't need to insure cargo because somebody else is covering it, whether it's the freight forwarder or the ocean carrier or the trucker or the warehouse. All of these parties limit their liability to almost nothing. So it is incredibly hard to recover anything from a third party. So not only is the onus on the person trying to make the claim to prove that there was a loss, but they have to prove negligence as well. So that is never easy to do, and I think any of you who have had a leaking flexi or a problem at a port with a bulging container that no trucker wants to take, and everybody starts pointing fingers and trying to figure out who's responsible, and then you try to make a claim against maybe it's the terminal. Maybe from someone at the terminal that your container got dropped and that's what caused the damage. You're going to get a letter within 24 hours of putting in a claim that nope, nothing happened, not our fault. I mean, every one of these ocean carriers, truckers, Flexibag providers, they will quickly deny a claim, and then again it becomes this huge process. Sometimes you will have results, but it's a heck of a lot harder to get it out of a third party than it is to have your own coverage. The limited amount of recovery is also a huge factor. If you look at the ocean carrier item on the slide, $500 per package or customary shipping unit. Now, with a Flexibag, we're talking one unit. It is not a bunch of cases sitting in a container of bottled goods. So their limit of liability, in theory, is $500 per customary shipping unit. So you are unlikely to get much back from the ocean carrier. All of the different modes of transportation have these limits. They are generally somewhere in the fine print or on their website or on the back of a bill of lading. It's pretty hard to find, and again, you don't worry about it until something happens. But I can tell you, it is really hard to collect from any of the parties involved in your transaction. So what we would say is single biggest reason not to rely on the third party. If it's not their fault, they aren't responsible. So a lot of stuff happens, shit happens. It doesn't mean that there's someone's fault. Again, that's the biggest issue with trying to collect from someone else. And no matter what, there's certain things just are not covered. So mysterious damage. I mean, or mysterious disappearance that we talk a lot about with case goods, especially the natural disasters that I talked about. If it's mysterious and you can't prove it, the carrier's not going to pay. So a lot of these items just are not going to be collectible unless you have a good insurance policy of your own. Now, bulk shipping itself, it's still relatively, new type of shipping in a way. It's the growth has been incredible. In 2000, less than 10,000 per year. It's every year the growth of flexi tank movement has been increasing at least 15%, sometimes more. Obviously, it depends on harvest volumes, et cetera. There's a lot of manufacturers of flexi tanks. Some of you who ship in flexis get to know your manufacturer really well. You know exactly what the bag is. You've tested it. You've vetted it. Many people don't. There are a lot of different types of bags out there. I will say, in terms of the perception of risk compared to bottled goods, case goods is actually higher risks overall in terms of losses than flexis. Now, part of it is that valuation. The bulk cargo is not generally valued as high as bottled wine or bottled spirits, but there is a lot of responsibility by the Flexibag providers. So despite all of those limits of liability, I would say most of the Flexi providers actually have a very good reaction to any claims, to leakage, to need for cross-pumping. So there is another layer of responsibility that isn't necessarily there in other products. The biggest issues, leakage and the damage to the container walls. So from our experience, and we ship a lot of flexi tanks, those are the two biggest items that happen. And what we generally see as the reasons for the issue, shipper filling the bag out of approved parameters, bag quality issues, poor fitting of the bag, faulty valves, and then, of course, the bulging that can result from either movement of the bag inside the container, movement of the wine. Those are things that just are going to happen in terms of the shipment of flexis. You're not going to avoid it. However, there were all of these issues did lead to responses in the industry, and there is a code of practice covering both manufacturing and operational issues. So the manufacturing standards were put together to provide a certifiable framework for high-quality manufacture of bladders to facilitate the safe movement of liquids without the leakage or bulging. So the standards include a variety of material properties of the bag, the valve, testing for various impacts and movement. They're not legally enforceable, so again, it's kind of like the insurance. Your bag provider may or may not follow those standards, but I think when you do think about the bag to use, you absolutely can ask your bag provider or your freight forwarder who's using the bags, what are the standards? Do they meet the specifications that are outlined in some of these documents? These are all available online on the web. You can look up these standards and just, again, hold your bag manufacturer accountable or your freight forwarder accountable for making sure they're vetting the bag. Got some lovely pictures. This one kind of looks like a murder scene, but again, the other thing that happens, there can be sharp objects in containers, creating holes in the bags. The bulging, leaking. Bulging is endemic. We see it a lot, and when you have a container bulging at the terminal, that container is unlikely to get moved off a terminal without fixing the problem. There are times where we have been able to move bulging containers off terminals, either putting them on a flatbed or just making sure that the load is relatively stable. But in most cases, if a container either arrives at the load port or the discharge port with a bulging situation, that container is going to have to be dealt with before it is shipped. And again, in many cases, the bag provider will come in and assist, and they've got surveyors all over the world. They'll check out what's going on. They'll cross-pump the container into a new flexi tank, into a new flexi tank and a new container, and on you go. But who covers those charges? Now, again, if the Flexibag provider absolutely feels they're responsible and will take that responsibility, they will do that at no cost. If not, if it was a problem with the loading, if they saw mishandling in any way, or if they felt it was the trucker's fault, those charges for that, any of the loss and damage can be claimed on insurance. So again, just to be aware of the bulging issues. The bag quality is said. These are various, a lot of numbers on this screen, but there's a lot of directives out there in terms of EU directives and US FDA regulations. These type of quality controls help prevent contamination. That is another issue that we do see in insurance claims, contamination of the product. And so when we talk about insurance, we also want to talk about mitigating risk. So making sure, again, you're using good quality bags that have that are following these protocols, so you're less likely to get hit with contamination issues. Again, it is insurable. If you have insurance, it may not be insurable. These are something that the bag provider are unlikely to cover. They are going to say that their bag is in compliance and that it was some other problem besides the quality of the bag. So it tends to be very hard to collect on contamination issues from the bag provider. Just a quick case study on something that we dealt with. We do ship quite a few dual flexis as well as single flexis and other, all different sizes, shapes, et cetera. This is the type of thing, again, that we find insurance incredibly important for. This is a shipment of a dual flexi, basically 2 10,000-liter bags. They're seamed together. The top bag leaked out completely over the course of the voyage. The container arrived. It actually was in pretty good condition. There were signs of leakage. You could see the liquid stains on the container, but it wasn't bulging or anything, so we got it delivered. We had surveyors come in, both from our own insurance surveyors as well as the manufacturer of the bag. So we got it delivered, opened it up, and the investigation showed that the valve was pressed against the container door during voyage, causing it to crack. Now, the flexi provider claimed that the issue was due to poor loading and bracing of the bag or not using the straps correctly. So that's a situation where there was a lot of back and forth on that one in terms of whose fault it was. Now, eventually, the flexi provider refused to cover the claim. Our insurance kicked in and covered the entire loss. So the process is important in terms of understanding what you need to do when there is a problem, making sure you are contacting all parties involved. We'll talk a little bit about the process for claims near the end of this, but it's just, there are many times where it is a gray area and everybody's pointing fingers, and without insurance, you're stuck. So contingency insurance, I just wanted to touch on this because I think it's something that is, again, not very well understood and an incredibly inexpensive way to add some backup peace of mind in terms of your shipping. And again, a lot of you in the wine industry are shipping on an ex-works terms or maybe FOB port terms, and feel there's really no responsibility for you as an ex-works shipper to insure the cargo. That is up to your buyer, and you don't even think about insurance. Now, as an example, you ship your flexi tank and it's going out of Chile and it's going to the UK, and your buyer has terms, 60 days after arrival, they're going to pay you. The Flexi arrives, they say it's contaminated or heat damaged, and they don't pay you for the goods. And you say, well, you've got insurance, claim against your insurance. They say, we don't have insurance, we never have insurance. You are absolutely stuck for that loss unless you have bought contingency insurance. So again, it's peace of mind insurance, it's backup insurance. If you sell X Works and you rely on your importer to have insurance and they don't, contingency insurance will kick in and pay any losses due to damaged cargo. Now, if that shipment arrived and your buyer just refused to pay you and there was no damage, insurance doesn't cover that. There has to be damage for it to be covered. But if indeed it was contaminated or heat damaged and you had contingency insurance, you would be covered. So again, I think that the other example of the risk of the sale of salvaged goods, if you have contingency insurance, you can kick in for that. So it is just, for me, like a no-brainer. It might cost you like $25 per load. And maybe even less, depending on where you're shipping to and from and your volumes. But it is an incredibly easy type of insurance to obtain. Same thing if you're buying from someone who is selling to you CIF, cost insurance freight. In theory, that shipper that you're buying from should have insurance. Nobody ever asks what the insurance is when you're buying CIF. That insurance could be just total loss. It could have $100,000 deductible. It could have a million different stipulations that unless you ask, you are not going to know. So you're buying your wine, you're buying it from your supplier, they're shipping to you CIF, it arrives damaged. You say, the whole load is damaged. You need to, put in a claim. They say, oh, our deductible's whatever, $50,000. Yeah, the load is $70,000. We'll give you $20,000. Contingency insurance would kick in and pay that remaining amount. So incredibly useful, not very well understood, but very useful. And you can have it as part of your own policy. If you have a big corporate cargo insurance policy, just make sure contingency insurance is in there. Most underwriters will add it at a very, very low fee. So for us, it's something that we do all the time, and it happens, we probably have at least 20 contingency insurance claims covered a year. And again, because we insure so much cargo, we do have a ton of claims that we deal with. This is a product that is easily damaged. So it's something that is just said, peace of mind insurance. Validating a loss, again, no matter what, you still have to prove the loss. John Sebastian back in the back of the room, he knows this a lot with the SAQ in Canada, who doesn't want to prove anything. They just want to claim a loss. And we have many, many discussions about you just can't assume that we're going to believe that this loss is valid. You do have to prove that something happened to your cargo. So again, notifying all parties upon any sign of damage or loss. Depending on extended damage, definitely getting in surveyors. And with flexi tanks too, the surveyor may be 3 parties. It may be someone from the ocean carrier because there's container damage. It may be someone from the Flexibag provider, and it may be a third-party surveyor from an insurance company should you have insurance. And again, you can get 3 different parties taking a look at that, look at the container, look at the Flexibags, do full investigation so we can document and prove out a claim, as well as if it is indeed the ocean carrier's fault or the trucker's fault, we can get that proof. So you will still, if you're insuring, say, with WSSA, you would get your money, and then we would go subrogate against all these other people to try to get some of that back. Never an easy job to subrogate, but that is something that when people use our insurance, they know that we are the ones that are going to go after those third parties. If there is someone responsible, we will try to get that subrogation done. Absolutely holding the container and not offloading it if you get a flexi in that's leaking. Obviously, to alleviate damage, we will often want to get that container cross-pumped so you can try to get as much of the product out as possible. But if there is significant damage and you do see an insurance claim coming, better to hold everything in place, get everyone out there on site to do those surveys. If you have pumped it out, retain the container, retain the packing material. In an insurance claim, you will be covered for any storage charges on that container. So if you're worried about holding a container and you know you have insurance coverage, that insurance, that part, say you get charged, you know, $50 a day for holding that container, that becomes part of your insurance claim. So you don't necessarily have to worry about, oh my God, I'm going to be accruing all this per diem if I hold this container. That becomes part of the claim. So again, these are just some tips in terms of if you do have a claim. Again, from our point of view, if you're working with us, we will work with you every step of the way. We love to bring in new insurance customers and add to our pool. The beauty of, again, working in a pooled environment, you have no risk to your corporate policy. So, you know, if you have a corporate policy and you have a big claim, your rates are going to go up. And if you're insuring as part of a massive pool, then we have not raised rates in over, I think it's been at least 12 years. So because of the volume we have, and we keep adding more volume, our rates remain stable even if there are, you know, many, many claims. And we do have a lot of claims every year, but the volume is such, it protects you and your policy. Should you, and there's some people too who just insure sporadic shipments. They've got high value shipments. They've got a risk area that they want to look at. That's where we can step in as well. That's what I got. Any questions? It's end of day. I pity the guy that's going last. It's getting really late. So, sure.
Yeah. So this policy is global.
Yes.
Totally global. All right. Thank you. And you insure, so you offer the insurance terms of the contract to bulk shippers, importers, traders, or brokers.
Yep.
Any other? Do you offer to other logistics operators, or do you work exclusively with Albatrans?
So we do work exclusively with Albatrans instead of insuring like for them, but we will insure, and insurance also has to basically cover the party on the bill of lading too, so the owner of that cargo. So if you're a logistics provider and you want to have your client covered, it could be done through WSSA. That client would be part of our policy. They just get entered into the group, and once they sign off and enter our group, anything that they ship can be insured with us. And then say if it's under our policy, but you're the logistics provider, we could bill you for the coverage and you bill it to the client. So that's what some logistics providers do. They do have their clients covered through us and just act as the conduit. But in general, the way insurance works, that the person that is actually going to receive that check should be the one that is insured under our policy.
Okay,
Does that answer your question?
Yes, it does. Thank you.
Thank you for the answer. Do we have any more questions? I see one here.
Thank you. Do you share this presentation? Can I get a copy of it?
Oh, sure. No problem.
How does that work?
Just give me your card and I'll email it to you.
Very good.
Okay.
Thank you.
Thank you.
That was easy.
I'm looking around. Any further questions? You have told them all.
Well, thank you
In
so
a
much for your
horse
attention.
ride.
And enjoy the show.
Thank you very much.